Good afternoon, everybody. This is Dennis Wilburn with the How to Make Money Trading Stocks webinar. You talk about multitasking. It's only like 8 o'clock in the morning here in Hawaii, but of course it's 11 o'clock in California and pushing on to what? 1 o'clock in the afternoon on the East Coast. So I want to welcome everybody to today's session. We're going to keep it really quick and simple today. All materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. We saw some, 2 o'clock on the East Coast. Thanks, Eric. We saw some weakness kind of creep into the market this week. Actually started towards the end of last week. And then the big question as the market has stabilized after the Fed announcement on Wednesday, it has stabilized kind of to the downside. Tech stocks have been taking a whack, but there has been some rotation into other areas such as some of the financials and that type of thing. So the big question on many analyst minds is, will this pullback be different than the short and shallow pullbacks we've had over the last several years? Which it's going to be. We don't know per se. Here's a little bit about who I am. And what are we going to do today? Real quick market review. Taking a look at a couple of stocks, ETFs, setting up our the outcomes of some of the ones we did in fact get into. We opened up one trade. Going into this, end of this week. We got stopped out on the nugget trade because of the reaction to the Fed. And so let's take a look and see what's going on here. So here's where we sit as of about 9 o'clock this morning. All the indexes are up for both the year and for the above their high from last year, although Russell has pulled back a little bit from where it was last week. Active trend trading, we took a hit on Nugget this week, but we had done so well with Strategy 3 earlier on, and also some good returns on Strategy 1 that we're still holding total above 20% on all the portfolios. Let's take a look at what we're doing with the indexes. Okay, here's the S&P. S&P, it's kind of interesting. I want you to look at a little pattern that's continuing to go on in the S&P. Okay, you've got this region down here that went from about 2405 down to about 2380. There it is right there. There's the bottom of it. And I'm going to change colors here, guys. Darn pen sometimes has a mind of its own. Then I got up here at 2480. And so it was kind of operating within that level. Well, look what's going on right now. Okay, we've pulled down, got a solid level of support down here at the 2420 level. We got a solid level of resistance up here at about just above the 2440 level. So when it's in the middle, there's not a lot to do. When it's and so, excellent, David. And when it's up here towards the top, not a lot to do. I wouldn't necessarily go short, but if we're selling the spider, so selling the weekly spider call, that's where we'd want to be selling the spider calls at. Down here where it's close to the 20-day moving average or the 2420 level, that's where we'd want to be selling the puts for the weekly puts for the SPY, and that's for strategy number 3. Not a lot going on. Let's take a look at, let me pull up my other pen here. There we go. Okay, Truist Index rolling over. However, price action continued to move horizontally. Momentum, kind of in a downtrend. Momentum on the market forecast for the daily chart, again, kind of sloping down. We had some negative divergence going on here, a little bit of negative divergence going on there with the weekly. And the weekly, again, is just kind of driving sideways in what would be considered a horizontal flag If it breaks out the top, it's going higher. What are some of the, with the Fed increasing the rates by 25 basis points, 25 basis points or 0.25 basis points, 0.25% is what they increased it up to. And it doesn't look like it's having a lot of effect here on the S&P. Again, S&P driving sideways. Again, remember what time of year we're in. We are in the, going into the place where we would expect some summer doldrums type of action, which means moving sideways. Here's what we have going on with, I'm going to get rid of this and just utilize this most recent. What do we have going on in the NASDAQ? NASDAQ came up last week, sold off big last Friday. That was kind of our first indication. Did a classic move back up to the 8-period moving average and then dropped after Wednesday. Now that the Fed is out of the way, it looks as if, at least on a short-term basis, that TSI is down in the lower reversal, has not done a tick up yet, but we are looking, it is looking like the NASDAQ is being supported at the 50-day moving average. Is that an opportunity to potentially get long? Yes, it could be, simply because if the action on the index does similar to what it's done in the past, which is a pull back into support and then a bounce, this is around where we would be looking at to go. Again, momentum looks like it's turning around for market forecast. Hasn't ticked up yet. And then there's, on the other hand, which is the longer term weekly chart, these look basically like it wants to continue falling a little bit. Where might it fall to? Well, of course, you got the 5,600 level, and then you also have support down here at the 5,490 level. Important areas to go ahead and just mark on your charts, so as the NASDAQ gets down there, you can be taking action on the Qs, or TQQQ, or or the SQQQ. Okay, Russell. As you can see, Russell, really nice push up into. Russell is now operating within a slightly uptrending price channel. We went up and made a new high. It made its new high on, some positive divergence actually. So it's pushed back up there. This 1430 level is a pretty strong level of resistance down to 1420. Call that your resistance zone. And now we're pushing back down. And if we extend this let's extend it over here. There we go. If price actions get all the way back down into between the 1370 and this line over the next week or so, look for a potential bounce off of that. By that time, the TSI should be retracted back in and maybe ready for a nice pop-up. Nothing on the market forecast there. Driving sideways, market forecast momentum on a weekly. Nice little uptrend going with the TSI on a weekly basis, and a little up pop on the Russell on the weekly momentum. The one thing that I will just caution everybody on is just take a look at this week's candle. It's not quite a bearish engulfing of last week's, but it definitely is a big red candle that's dropping back below support at the 1402 level. Again, I'm not going to be saying, hey, let's get short here and like that, although we did go long in TZA, and if price action moves all the way back down into this area, TZA should hit some of our profit targets. And I'm going to just play it conservatively on TZA. I'll take out part of the profits at 5%, and I will take out the next set of profits at somewhere between 7 to 15%. And I'll pop that up real quickly. to give you a picture of that. Let's get rid of that one. And so this little downtrending channel here that we see on TZA is the flip side of the uptrending channel that we see in the Russell IWM or TNA. If we push on up into, now the 5% from where we got in at would be about 1733, and then if we moved in, because we got in about 1650, and if we move higher than that, back up to the top of the channel, let's go find this, find it. There we go, approximately there. If it gets back up to the channel, depending on when that happens, you're looking at about a 10% gain from what we originally got into it. And so, yeah, David indicates he's planning on taking on off half at 5%. And David, I think that's a great plan. I'm planning the same thing. And once I get that 5% in the bank, I will basically move the rest of that position to break even, so that I don't, because with as we've seen with these leverage ETFs, they can give really quickly, but they can also take away really quickly. So keep an eye on that. One of the things I'm going to be talking about in the very near future on Premium Members training session is I'm going to be talking about adjusting stops based on some of these intraday charts. And this is, of course, a daily chart, but I'm going to flip this over real quick, give you if you're a premium member, here's what we're looking at. So I went in here and I drew this trend line on an hourly chart. Now, if it breaks back down below this, that'll be about the 1677 level. Well, if I drop the 50 period moving average on an hourly chart, I want to kind of be out of this position, and as you can see, that's just about the break-even point. And basically the only thing that we would be, if it did hit, if the stop loss, if the stop loss was moved up there, it becomes a trailing stop at 1650 break-even. Yeah, it would waste some time being in the trade, but at the same time, you never know on these trades whether they're going to take off and just shoot on up and take out the higher levels. But that's what we're looking. That's what I'm looking for, and that's what I'm looking at. So moving right along, we've got to cover some other. We'll come back to that chart. But I'm going to do a presentation specifically on that, and I may make it a free presentation and actually post it to my YouTube channel. So percentage of stocks above the 20-day moving average, as you can see, it has started to roll over. I'm posting this chart today primarily this indicator because it's kind of interesting. This is a 6-month time period, and as you can see, over the last 6 months, and this red line up here is usually at the 80% level, and as you can see, the 80% level is not there anymore. I mean, the top of the chart says 76%, and so what that's telling us is that the bias, or at least the internal bias on this particular chart, has been down and to the right, which is showing us that the non-weighted indexes have had a little bit of a downside bias compared to things like the S&P, the Dow, and the NASDAQ. TZA open $16.50, $6.50. T1s 7%, 5%. T2 7 to 20%. 20% is definitely a reach on this particular one, I believe, at this time. So we'll, if I can get 7 to 10%, that's great. Hit with a negative on the nugget trade, sold out at 32.50 as a reaction to the Fed. Tesla still continues to do good. I'm looking at moving Tesla and NVDA into basically watching them on a regular basis for strategy 1, 2, and 3 trades. So reality of trend trading, know the trend, define the area of interest or value, and define the trigger strategy and targets. If the mechanical side of your trading isn't working, check the mental, physical, and spiritual side of yourself to see if that could be interfering. Because a lot of times it's the things away from, like if you have an argument with your spouse or something like that, you're not going to be in the mood to be able to trade well because you're going to be feeling really bad about all the bad stuff you said to your spouse. Well, that translates, and if you can't find yourself in a condition like that, please don't waste your capital is what I'm trying to say. So okay, here we go. Still looking very good. We're on track. We're a little bit over 20% total return. Strategy 1. I'm looking for strategy. Here's what I'm looking for, strategy 1. Through the last 6 months of the year for strategy 1 to continue to kick up nicely into looking for somewhere between 25 to probably 30 or 40% return on strategy 1 through the second half of the year. And that's partly because of some of the seasonality we have going on with the leverage ETFs. And strategy 3 continues to work well. We've been able to increase that level, and now we control. We basically closed out an NVDA trade on strategy 3, closed it out for 56%. We closed out the Tesla trade for 100%. Nugget trade was not performing, only made 1.37, so we closed that out. And then going into the rest of the year, just this week, opened the position on NVDA and Tesla. And if you are a premium member and will be there for the next session, I'll be talking a little bit about what I'm going to be putting out over the weekend as far as the actual strategies for when to get into these trades, or when I'm going to get into them, so that way you won't have to be as dependent upon the text alerts that I send out prior to getting into a trade. So shorting. And so, yeah, David, you hit on it really important. David indicates that shorting is really tough, especially in this market environment, because you never, they just flash down and then bounce, flash and bounce. And so he's found that waiting too long is a ticket to losses. In other words, waiting too long to close out a position. And so you have to adjust your own, adjust yourself and your expectations so that your expectations are a little bit lighter or a little bit smaller during this time of year. The market tends to kick back off in the October, latter part of September, but definitely into October, November, December, in a lot of good ways. So keep the A growing. If you're going to be joining us for the premium final hour, we'll be back online at 12 noon straight up. So until Monday, we will be back on schedule with the aftermarket Mondays this coming Monday. So with that, any real quick questions? I'm going to cover just. Actually, I'm not going to. We've actually talked a little bit about everything. I will show you the one thing that I am looking at is our old buddy Nugget. Okay, it is getting down towards the bottom of this channel. Same way on GDX, getting down to the bottom section. Well, actually, with GDX, because it's a non-leveraged ETF, it is getting back down to a level where you expect support, and we'll see where it kicks off from here. Remember, typically on the gold index, I'm not saying that's going to happen this time, but typically you get a nice kick up starting around mid-July all the way through the end of August, first part of September. And so, okay, guys, have a great weekend. Mahalo. Thank you, Sean. Mahalo nui loa. I love all these old Hawaiian guys who used to be stationed here with me. Anyway, hey, God bless everybody, and we'll catch up with you first part of next week. Be on the lookout for that. Be on the lookout for the videos that I'm going to be talking about for when to tighten your stops up in a really, whippy market like we're having right now. So have a good one, my friends.